Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Sunday, January 9th, 2022. As you know, last Monday was my last live podcast. I normally did the podcast during the last hour of the market. And I'm really actually kind of missing it. I had a good opportunity for a trading position, and one of the requirements was that I couldn't do the podcast because I had to concentrate on the day trading for them during the last hour of the market, which makes sense because the last hour of the market is an important time for day trading because the large financial institutions come in and move the prices around. So I am creating a new format. I'm going to be doing a video each weekend, probably not on Sundays, probably even Friday nights or Saturdays, so there's some time to watch it. But in this new format, this is what we are going to do, or this is what I am going to do. I am going to review the swing trades that I had from the previous week, why I entered the trade, how I'm going to manage the trade going forward, win or a loss, but I will share those with you. I will also go over the current weekly trades that I have. I will also go over the current monthly trades that I have. A big part of my trading has to do with trading as many different time frames as possible. So I trade monthly trades, I trade weekly trades, I trade daily trades, I intraday trades generally on the 5-minute. But having as many different time frames is a big part of my trading. Number two, trading as many different types of stocks, different industries, equities, and as well as getting outside of equities as well, and trading things like gold, bonds, oil, silver, the dollar. I think it's important to have good diversity in the stocks that you trade, and then also trading different types of trading approaches. I use 5 different trading approaches, and so as many different time frames as possible, as many different types of stocks as possible, and as many different strategies as possible. So that's why I'll be showing you the daily trades, the weekly trades, and the monthly trades. So first of all, that's what we'll do. We'll take a look at current positions, my current positions that I started from since the beginning of the year. We'll see how those are doing. Was a tough week last week, obviously, in the NASDAQ, so not so hot tamale in the swing trading position, but the weekly trades and the monthly trades are doing great. Just kind of shows you why I use different time frames. Sometimes one time frame is not going to work, the other is going to work, so that I have a diversity of time frames. In my opinion, really helps out, and I'll kind of point that out here as we go. So after that, what we're going to do is we are going to talk a little bit about trader psychology. I think it's a very important part of trading. The ability to create a plan and follow it is your number one most important skill in trading. You do have to use proper technicals and good trading fundamentals as far as support, resistance, good risk to reward ratios, things like that. But ultimately, the ability to follow your plan is much more important, in my opinion, and that is why I'm going to talk a little bit about trader psychology. After that, one of my listeners in the live stream, Frank, such a great poet, and he always writes such great trading poems about trading. And I want to share one of those with you each weekend as well. And then we're going to go down through my watch list. We're going to go down through my watch list for the upcoming week. We're going to take a look, see if I can find some potential setups for the upcoming week. Doesn't mean that they are there right now as far as a legitimate trigger to get into the trade, but I'll go through each one. I'll mark the ones that I will be looking for, and I will describe what I am looking for coming in the next week to actually get into a trade. All right. So that's going to be the new format. Hopefully this will be helpful. Hopefully seeing my trades and how I manage them will give you some good ideas on how I approach trading. Like I said, we'll talk about the trader psychology. We'll go through a poem, and then we'll go down through my watch list, and we'll see if there are some potentials for this coming next week. All right. So, it's been a big change doing the live stream for 3 full years and then switching to this format, but it's what I'm going to do, and I hope it is still going to be helpful for you. So that's what we're going to do today. First of all, I have to run the U.S. legal disclaimer. It's about 40 seconds, so hang tight, and I'll be back in about 40 seconds, and we'll get started. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, so we got that out of the way. Let's start with the first trade of last week. I took the first trade on a CRM back on the 3rd of January. Nice setup here. I had a intraday rejection of the 200-day moving average and a V1. If you're not familiar with what V1 or V2s are, in the lessons playlist on my YouTube channel, I have a full lesson there, the full video about V1s, V2s. They're a big part of my trading. But I did buy this back here on the 3rd with the intraday rejection of the 200-day moving average and the V1. I like the sideways motion. Whenever I set up a trade, there's three things that I have to identify immediately. And the first thing is, where is my end of day stop? On this trade, my end of day stop is a close below the 200-day moving average, giving me a good risk to reward ratio. If it closes under, I have to get out. But it's very important in trading to buy as close to what your end of day stop is as possible. And the end of day stop here is a close below the 200-day moving average. You see this red line down here. This is my other stop. I always have two stops. I have an end of day stop and I have an emergency stop. End of day, I wait till the end of the day, because at the end of the day, the large financial institutions come in. They take control away from the day traders and the algorithms. I consider the closing price of the day to be the most valid price. And so that's why with my swing trades, I wait till the end of the day. But in case things go bad, which they almost did, well, they did in this trade, but in case things go really bad and they get down to my 2 ATR emergency stop, then I get out immediately. I do not wait to the end of the day. And what I do is I take my maximum allowed loss. Let's just say I have $100,000. I'm trading 1% is going to be my maximum allowed loss. So that's $1,000. I take the $1,000, I divide it by the value of the 2 ATRs, and usually 1% of your capital is a pretty good rule to figure out your emergency loss. So if I have $100,000, 1% is $1,000. I would take $1,000 divided by the value of the 2 ATR, which is 1509. And you can see I bought here with an intraday rejection of the 200-day moving average. I put my stop, the emergency stop, down below. I have another line up to the top here. This is my 1.5 ATR trailing stop level. If the stock starts going my way and gets up to that level, then I get into trailing stop mode, which means that if I have a close below the previous day's low, I get out of half. And then if it rejects the 70, I would get out of another half of a half. And then if I have a close below the previous day's low after rejecting the 70, I would get out of the balance. But that's how I set up my trades. I look for good intraday rejections of the 200-day moving average, the 250, the 30 RSI. I place my emergency stop below. I place my 1.5 ATR trailing stop above, and you can see the 2 ATR is 1509. That's below here. 1.5 on my charts is 1132. I placed that above. So I don't know if it's going to go below. I don't know if it's going to go above, but I need to know what I'm doing regardless. Well, so this trade didn't work out. I bought this here again with an intraday rejection of the 200-day moving average. Bought here at about 255.30. The next day was not a good day. On Tuesday, I believe, or was that Tuesday or Monday? Let me check. That was Monday. Yep. Okay. Yeah. So that was the first trading day of the year. So it almost came down and hit my 2 ATR emergency stop. You can see it got very close, but it didn't. So I I would have had to get out if it got down there, but it closed back above, but it still closed below my 200-day moving average. So I immediately had to get out of the trade. Not a great trade, but you can see the next day, good thing I got out. You know, there's something about when you take a stop, it's never fun, but then if it keeps going down, you're like, oh man, I'm glad I took that stop. So I did enter here at 255.30. I got out at the end of the day at 248.10. So first trade of the year on the day trades, not so hot tamale, down 2.7%. And so that trade is over. All right, let's go over to Amazon. I took Amazon here the next day on the 4th with this intraday rejection of the 250-day moving average. Again, I'm trying to buy as close as I can with the rejection of a major moving average like the 200 or the 250. I bought this here, 33.54.61. I placed my emergency stop 2 ATRs below. I placed my trailing stop level 1.5 ATRs above. Here at 34.74, here's the 1.5, here's the 2 ATR. The 2 ATR is the emergency stop. The 1.5 is my trailing stop level. But last week went down, as you know, so I bought here at 33.54.61, and I got out here at 32.90 even with a close below the 250. Remember, that was my end of day stop. This trade was a negative 2.11. And that's the thing about trading, everyone. You're not going to have all your positions go your way, obviously, right? But you have to put yourself in a position where if you're right, you're right. You're wrong, excuse me. If you're wrong small. And if you're right, you have the potential for a big win. That's the math. That's how you make long-term money in trading, by having good risk to rewards, cutting your losers short, and letting your winners run. So again, rejection of the 250-day moving average here at 33.54.61. Did not hold that. Next day down, got out here for the loss. All right, on the 6th, which was the Thursday, I took another trade here. I like the trade a lot of things going on here. I'm still in this trade. Here we have a under 30, over 30. That's one of the signals that I use. We also have a double bottom with a bullish divergence, which means that this previous low here had all these deep red MACD bars. Then we rallied into green. Then we came back down. We were lower than over here, but see how there's no red whatsoever? That's called the double bottom with a bullish divergence and a missing right shoulder. Even if we had a little red, as long as it was less than half of the depth of the deep bars here, it still would be a double bottom with the bullish divergence, but there was no red, making this even a better trade. Really what that means is there's a lot of momentum, selling momentum to the downside. That's why you have these deep bars. We rally into green. That's one of the requirements. And then we have to come back down. We have to test the previous low and look for less red. And there is less red, meaning that sellers are running out of momentum. So that's called a double bottom with a bullish divergence. Now, I still need a trigger. Well, there were some triggers here. Under 30, over 30, there's a V1. Here is day 1. Here is day 2. Day 2 washes out day 1, closes above day 1's close. That creates a V1. That's an entry trigger. Also rejected this previous low here. That's a false breakout to the downside. You can see my emergency stop here is 158.70. My trailing stop level above is 190.90. The RSI over here is 31.84. So my end of day stop is going to be a close below the 30 RSI, or if it gets to my emergency stop level down here, I will just have to get out. So this trade underwater as well, down about 2.93%, but it has not hit my emergency stop, and it is holding the 30 RSI level. So last week, 3 swing trades that I took, not so hot tamale, but not every week is going to go our way. Now, I told you before that I do trade different time frames. This is Merck. I bought Merck on the weekly, same kind of approach where we rejected the 200-day moving average on the week. Weekly bars close on Friday. So at the end of the week on Friday, I bought Merck here at 71.90. My end of day or my emergency stop all the way down here 62.70, 2 ATRs below my entry point. I put my trailing stop level above 1.5 ATRs above the entry point. That is the orange line, and you can see we have had a really nice trade so far. Bought here at 71.90. Next week went up nicely, went up very, very nicely. I also do take partial profits whenever I have a move on a weekly bar or a daily bar if it moves 0.45 ATRs from my entry. So every 2.41 price above where I bought it, I will get out of a portion of the trade. Now, I'm still in the trade. And my end of, now we've got to trailing stop level here at 79. So I'm not going to let it come all the way back to the 200 now. If I get a close below the previous bar's low, I will get out of half of the position. Then I'll manage it going forward. But if I got out of half the position and then if it closed below the 200, I would get out. But nonetheless, this has been a really great trade. I've been in this trade for about a month. This particular trade up 10.35%. I do see the earnings bar over here. So the earnings will be announced on the 3rd. I never hold through earnings regardless of whether I'm trading daily, weekly, monthly. I never hold through earnings. I think holding through earnings is one of the best ways to lose a lot of money quickly. So I will get out before that. But so far, really nice trade. Have hit my trailing stop level. Just looking for a close below the previous day's low. Exxon on the monthly. I did buy Exxon on the monthly. This has been a really nice trade. It's been a long time ago. It was 5 months ago, but we had an intraday rejection of the 200-day moving, 200-month moving average. Bought this here at 54.70. My end of day stop would be a close below the 200-day moving average. Never did that. Placed my emergency stop down here, 2 ATRs, 37.20. Placed my trailing stop level above here, 1.5 ATR trailing stop level above. You can see we got to a couple months ago. So if this bar would have closed below here, I would have sold half. But this particular trade is up, entry to current price, 20.84%. So it's a good kind of example of the day, the daily swing trades not working out, but the weekly trades working out and the monthly trades working out. One more monthly trade on TLT. I bought this here with this higher low V1, bought this at 147.96, placed my emergency stop here, 127.10, placed my trailing stop here, 160.30. My end of day or end of month stop on this would be if it closes below halfway of the washout bar, and here is the washout bar halfway here. Whenever I take a V1, if I have a close below halfway of the washout bar, I will get out. It's not the end of the month yet. It's 1/9/22. So I have to wait to the end of the month before I make a decision on this. And if it closes below halfway of the washout bar here at 145.10, then that will be my end of bar signal to get out. Now, if it went all the way down here, 127.10 to the emergency stop, I would get out immediately, regardless whether the month is over or not. So this is a monthly bar. You give it a little bit more room to breathe. You position size accordingly. So that's the plan there. So real quick recap, CRM bought a rejection of the 200-day moving average. Next day it closed below, got out, took the small loss. Amazon, rejection of the 250-day, got in with the rejection of the 250. Next bar closed below, got out with a loss. Zoom, took the under 30, over 30 with the double bottom and bullish divergence. End of day stop on this is a close below 30 RSI. So it is still above the 30. So I am still holding. Merck on the weekly, nice intraday rejection of the 200. This trade is doing very well. I am in trailing stop mode. Again, Exxon on the monthly, rejection of the 200-day moving average at 54.75, up beautifully, up about 20% on this trade in trailing stop mode, looking for a close below previous day's low. And then on TLT, this particular trade down about 3.18%, and I have to wait for the end of the bar for this one for me to make my decisions. So, all right. So those are the currently the current trades that I have and how I am going to manage them moving forward. I mentioned earlier my good friend Frank. You can follow him over at Frank D over on Twitter. He's a great writer, poet, musician, and I love to share his poems with everyone, and I did it every day on the daily live podcast. But in this new format, I want to share this as well. And let's see, this is from January 6th. Let's see what Frank's poem had to say. Trading is having a sense of feel. Emotions are often hidden between ice and steel while calculating risk to find a good deal. Though stock prices change, the gains and losses are real. Every entry a challenge, a new spin of the wheel. I mean, how good is that, right? I mean, it's so pertinent. Trading is having a sense of feel. Emotions are often hidden between ice and steel. While calculating risk to find a good deal, though stock prices change, the gains and losses are real. Every entry a challenge, a new spin of the wheel. Isn't that great? It's just absolutely fantastic. Thank you. Please follow Frank at Franco D over on Twitter. He puts these out every day. They're so fun to read, and really appreciate you, Frank. I really do. Okay, so before we start looking at some potentials, again, I'm going to go down through my watch list, the entire watch list one by one. It's going to take a little while. But it's a good time for us to analyze some major stocks, see next week where some potential entry triggers might be, and then we can also take a look at the major moving averages and the major indexes, and we'll take a look and see what those are looking like from a technical perspective. But before I do that, I mentioned at the beginning of the show how important trader psychology is. It's really the most important skill you can ever learn in trading. I have my favorite Facebook and Twitter channels that I like to follow. Great traders, educators that put out great information, great posts. And one of my favorite poster is Steve Burns. Steve Burns has been a coach and a mentor for me over the years. Really appreciate what he's helped me with in trading. Really appreciate his friendship, and he always just has the best post. And so let's start and give Steve a little plug. You can follow Steve Burns at Joseph Burns on Twitter. It's a great channel. He posts such great information. It's free. Go ahead, subscribe to him, read his post, internalize what he's telling you. It will do you a lot of good. So let's see what Steve has to say in this post. Pretty short post, but full of great information. Patience is the rarest trading skill. The ability to wait for signals and hold winners. There's a lot to unpack in there. Patience is the rarest trading skill. Have you thought about patience as a skill? It is a skill. Warren Buffett says there's no 3 strikes rule in in the stock market like there is in baseball, meaning wait until that great setup comes. You have to have the patience. You don't always have to be in a position, everyone. You just don't have to do it. Wait for confluence, combinations of indicators lining up. That's what I do. That's a big part of my trading. I like to have multiple confluences, combinations of indicators lining up, and you have to have patience for that to happen. You can't just be trading all the time. There's an old saying, if the trade's not obvious, it's obviously not a good trade. Isn't that great? It should jump off the screen with you. When I studied one-on-one with Dr. Alexander Elder, he told me, Greg, a trade should just jump off the screen and grab you by the face and yell at you and scream at you. It's a good trade, and you have to have patience for that. So patience is the rarest trading skill. The ability to wait for signals makes sense, right? On one hand, the ability to wait for signals, that is patience, and that is very important. But the other part that people don't talk enough about is holding winners. You have to have the patience to hold winners as well, and it is a skill to hold the winner. Some people are very good at getting out quickly when they're wrong, but you have to have enough upside and big wins occasionally to make the trading math work. So you have to have patience to wait for the setup. You have to have discipline to get out of the setup, but you also have to have patience on the other side when you're in a winning trade to let that run. I mean, there are different levels and signals for me to get out of things, like when we reject the 50 RSI, if we have an under 30 over 30, or if we reject the 70 RSI. But one more time, patience is the rarest skill, the ability to wait for signals and hold winners. So please follow Steve at @SJosephBurns. Do yourself a favor, go to his website, New Trader U. U is just the letter U.com, New Trader U. He has great content there. He has some great online courses. He has many books that you can buy on Amazon. That's how I found Steve, is by reading his books, reaching out to him. And again, thank you, Steve, for all the wisdom that you have imbued to me over the years, and he's a great guy. So follow him at @SJosephBurns on Twitter. Check out his website, New Trader U, on the interweb. Okay, so we have taken care of trader psychology. We took a look at Frank's poems. We have gone over my current daily, weekly, and monthly positions. And let's go through and look for something that we can look for this week. I'm just going to take you through every single, there we go. I'm going to take you through every single stock on my watch list. And I'll just give you a basic idea of kind of if there's a potential setup, what the setup would be next week. So first of all, I like to look here, kind of an interesting chart a lot of people don't look at. This is the put to call ratio, and this basically is measuring how expensive puts are getting. And last week, when the market was rallying really high, we were down here, so their puts were very inexpensive. Of course, last week, we had a bit of a shock event with the Fed, and puts have rallied up here. But the best time, the reason I like looking at this chart, when the put call ratio starts to get this high over here, it generally means it's a pretty good time to go shopping and looking for some long positions. When put prices are super inexpensive, that usually means the market's a little high. So I am interested in going long here as long as I have the proper setups, because the put call ratio is getting high up here. Let's take a look at Apple. All right, well, Apple, of course, with everything else, has come way down. Look, we have a double top here with the bullish divergence. We have a peak here, tall red MACD. We pull back to red. We went higher on no green. This is a double top with the bearish divergence. This is bearish. It shows that this last move up here did not have a lot, or the buyer momentum was starting to run out, and it's exactly what happened. It came down. This green line and this green line here, this is the +1 ATR channel. This is the -1 ATR channel, or Keltner channel. Apple did closed below it on Thursday, went up a little bit on Friday, had a big sell-off at the end. Not a real legitimate signal here, but anytime you're above the value zone, again, the value zone is this green line and this green line. Whenever you're above the value zone, I like to wait for it to come back in the value zone and then sell above value. Well, I don't ever buy up here. I never buy over the second ATR channel, just because I know technically the odds are it's going to come back down. It's exactly what happened here. Here, came down a little bit, tried to come up. So now we're back in the value zone. I am looking for Apple to have a couple days sideways motion to show that there are buyers here, and then look for a V1 or a V2 trigger. Alternatively, here's the 5 EMA still above the 20 EMA. Whenever you have a 5 closing under the 20 and then closing back over, that is a good, legitimate, back-tested approach, profitable approach over time for Apple. So a couple things on Apple. We either need some sideways motion, then I look for a V1 or a V2 trigger to get long, or I look for the 5 to close under the 20 EMA and then close back over. So I don't see anything on Apple right this moment. Adobe. Well, Adobe right now is at 27.15. So a legitimate entry for Adobe would be an under 30, over 30. We're at 27.15. Monday or anytime this week, if we close over the 30 RSI, that would be a legitimate entry for me, as long as it doesn't move too far above the 30 RSI. About 35, 36 is my level. You can see the negative third ATR channel here. 92% of prices tend to stop going down or bounce when we get to this area. So I was talking earlier about a confluence of signals. If Adobe went under 30, over 30, it would also close back above the negative third ATR channel. That would be a good, legitimate entry for me. So not ready yet. It's 27.15 RSI, but if it closed above the 30 RSI, that would be interesting for me. So I'm going to check Adobe here on my watch list for next week as a potential. Nothing there yet, but if it closed back above the 30 RSI, that would be a legitimate entry for me. Here is AGQ. This is double leveraged silver. Nothing really going on here. For me to get interested in going long AGQ, I would need the 5 EMA to close above the 20 EMA to show some positive momentum. What I'd really like to see on AGQ is us to come back down, test this previous low. This would give us a beautiful double bottom and a bullish divergence. I would still need a trigger under 30, over 30, but if we got down here, tested this bottom, we would be in the low 30s RSI. So at under 30, over 30, along with the double bottom bullish divergence would be good, but this is quite far away from that right now, so I'm not going to mark that. Amazon. Had that trade on Amazon. Right now it's at 36.75. So for me to get interested in Amazon, I would need this to go under 30, over 30, either one day to the next, or intraday under 30, over 30 to the downside. Or alternatively, this would have to close above the 250-day moving average or close above the 200-day moving average. So where it is right now is kind of in purgatory. I need Amazon to either go lower, under 30, over 30, or go higher and close above the 200 or the 250. So I will mark Amazon. I'd love to buy Amazon with an under 30, over 30. ARK. Lot of discussion about ARK lately. We are at 31.58. So we have a double bottom with the bullish divergence. Here's our low with deep red MACD bars. We went green. We have come back down. We are lower than we are over here with less red MACD bars. So this is great. This is a double bottom with the bullish divergence. This is a bullish setup, but we still need a trigger. We're at 31.58. The trigger would be an under 30, over 30. So I will go ahead and mark ARK as a potential. Boeing has had a nice run here. Right now, in order to get interested in Boeing, for me, we are above the value zone. I don't like to buy above the value zone. I would look for a return to value, sideways motion, V1 or V2. Alternatively, close above the 200 or the 250, but this is past the second ATR channel. I would not buy up here. So really what I'm looking for on Boeing is a return to value, sideways motion, V1, V2. And again, if you don't understand what that is, I have a great video in my lessons playlist on YouTube about V1, V2 entries. You should check that out. So I don't really see anything on Boeing for me at the moment. Alibaba, Did have a nice under 30 over 30 here, and boy, really that was a nice trade. Right now it's a little bit extended. Does have a 520 crossover that does backtest well. I did not take that one because it's up at the second ATR channel. If I ever have a 520 crossover, any kind of crossover, if it's above the second ATR channel, I don't take it because it's kind of already made a move. It doesn't mean it can't continue up. It certainly can, but the odds are that it would come back. So for me, a return to value here, sideways motion, V1, V2 is what I would be interested on Alibaba. I'm not going to mark that one. BITO, which is Bitcoin ETF. Here we are. It's 29.29. We're at the negative third ATR channel. Excuse me. Let me grab a drink real quick. This is when I was watching on Friday. I didn't buy it because it didn't close above the 30 RSI, but if it closes above the 30 RSI on Monday, it will also close above the negative third ATR channel. So this is some good news for Bitcoin as far as it holding the 30 RSI level, well, almost 29.29. And Bitcoin is up over this weekend. So I definitely will be looking at BITO for a nice deep dip buy on BITO, although it hasn't happened yet. Berkshire Hathaway, big, huge move. Like to congratulate my friend Ava from the live stream. She bought this all the way back here with the intraday rejection of the 200-day moving average right here at about 277.66. Great risk to reward ratio, and look, did that pay off for her. So congratulations, Ava. Proud of you, but she was patient. She waited for a good risk to reward ratio at major support. But this is far too extended for me to get interested in whatsoever. Anheuser-Busch. Good explanation back here. Again, look, we got to the 30 RSI. It held. That was certainly the place to buy. Look at that. It's moved up beautifully. Would not be interested in buying the under 200, over 200 because it's so far extended on Budweiser. Looking for a return to value, sideways motion, V1, V2. So I will not mark that one. Beyond Meat's been kind of wild and crazy. We have a double bottom with the bullish divergence. Here's our first low with deep red and MACD bars. We rallied into green. We came back. We tested the low. Did not even have any red MACD. That means we have a double bottom with the bullish divergence. You have to have a signal to get in. Unfortunately, there really was not a signal here. An intraday rejection of the 30 RSI or anything else. So really nice big move here. Glad for people that have Beyond Meat that it finally could rally a little bit, but I don't see a clear signal here going forward this week. Caterpillar, wow, big move up here, too far extended for me. On Caterpillar, I would be looking for a return test of the 200-day moving average. That would make the most sense to me. Again, I don't want to buy it. Yeah, it's above the 200-day moving average, but I don't want to buy it here because the risk is so far, because it's so far extended above the 200-day moving average. I'd like it to come back down, maybe test that, close barely above, kind of similar to that Exxon monthly trade. So nothing on CAT for me. Cameco did trigger a V1 here. Really don't see anything. You can see buying Cameco CCJ back here with the intraday rejection of the 200. That would have been the spot, and that's really what I'm looking for. I'm really looking for either return to value, few days, minimum of 2 days sideways motion. Look for a V1, V2 to enter on a return to value trade, or another intraday rejection of the 200 or close under 200 over 200. So I don't see anything on Cameco. CCL, which is Carnival, had a 520 cross over here. It's over the value zone. I would wait for CCL Carnival to come back to the value zone, and again look for a sideways motion, look for a V1 or a V2. So nothing there. DoorDash, we did have actually a legitimate signal on DoorDash a couple days ago. Let's take a look here. So over here on the 5th, we closed under the 30 RSI. On the 6th, we did close above 30. That was a legitimate entry. I did not take that. the entry would still be valid because it's still holding 30 RSI. So for me, and again, we have a double bottom with the bullish divergence. Here's the low with the deep red MACD bars. We rally into green. We've come back. We're lower than the previous low with very little red MACD bars, meaning that from a MACD perspective, that the selling momentum is waning, and the implication there is that if you're running out of sellers, it would move up. So this would be legitimate to buy here. It's holding halfway of this big up bar. I like that with the double bottom bullish divergence, but really to get into a new trade on this, I would need an under 30 over 30 as one potential, or if we rallied into the value zone, pulled back, looked for a higher low V1 or V2. And again, you can, if you don't know what higher low V1s, V2s are, if you don't know what return to value V1s, V2s are, just look in my lessons playlist on YouTube and you can watch a video. The Dow Jones moving average. Well, again, we were well above the value zone. We got to the third ATR channel. This is 92% of prices fail at the positive, and that's exactly what happened. It touched, came back. We are back in the value zone, meaning that the price is back at value. I want to buy in value, sell above value. I do not want to buy above value and sell at value. Makes sense, right? So we are in the value zone, which is good. Right? Let a little air out of this big balloon that we have here, but we are coming back into the value zone. I'd like to see this move sideways for a couple more days, at least one more day, and then look for a V1 or V2 trigger to get long. So the indexes are starting to look interesting to me because we are back at value, but I don't see anything right now on Dow Jones. Disney had a nice move up here, looking for an under 30. Back here had an under 30, over 30. Right now we're above the value zone. We're above the 50 SMA, which is good, but I'd like to look for a return to value, sideways motion to show that there's some stability. Look for a V1 trigger to get long, but nothing interesting to me on Disney with this chart. DocuSign. Well, here we go. There's a lot of these formations here, everyone. We have a double bottom with a bullish divergence, missing right shoulder. That's great. I just need a signal. It's 29.36. So tomorrow, Monday, or anytime this week, if it closed back above the 30 RSI, that would be a legitimate entry point as long as it's not too far extended. Too far extended for me on the RSI is if it were to close like 37, 38, a little, that would be a little tough for me to take that trade. I want to have a close over 30, as close as 30, so my risk is the least. So I will mark DocuSign. Etsy. Well, we went under 30, over 30 a couple days ago. We're still holding the 30 RSI. There is a double bottom with the bullish divergence. Deep red. We have a rally into some green. We come back down lower, less red. That's the double bottom and the bullish divergence. So someone could have taken that trade on Thursday, still legit. End of day stop would be a close below the 30 RSI. So if it were to close below 30 RSI and close back above, I would be interested. So I will mark Etsy. Facebook does backtest well with the close over the 200-day moving average. Right now we're stuck under the 200 but above the 250. A close back over the 200 would be legitimate. I would prefer a little lower entry with an intraday rejection of the 250-day moving average. So this one just needs to move a little higher or lower. If it closes above the 200, that would be legitimate. If it comes back down, rejects the 250, that would also be legitimate. So I will keep that one as well. FCX, nothing really here. Nice bounce off the 200 that really rallied nicely back on the 20th, but I don't see a legitimate entry here other than a return to value sideways motion. So I will not mark that one. Fiverr had an under 30, over 30, along with the double bottom bullish divergence. As I was just saying, there are a lot of setups right now with double bottoms, bullish divergence, under 30, over 30. So that's interesting. It makes me a little bit more bullish on the market, but I still need to wait for a completely legitimate signal. This is 32.77. If this were to go under 30 and then back over 30 again, I would be interested. So I will mark FVRR. Gold. we are back in the value zone. Looks like we had a 520 cross under. So there's two potentials for gold here. If the 5 closes above the 5 EMA closes above the 20 EMA, that's a legitimate signal. Alternatively, if we close back above the 200-day moving average, that would also be a legitimate signal. So I will mark gold. GNRC, double bottom, bullish divergence. It's 2770. I'd have to wait for a close back over the 30 RSI, but I like it in conjunction with the double bottom bullish divergence. So I'll mark that one. Google, I believe, I'm not 100% sure here. Let's measure this. At the low, okay, at the low on Friday, it bounced right at the 30 RSI, and we're at the negative third ATR channel. So for a company like Google, an under 30, over 30 is a good entry signal, especially in conjunction with being at the negative third ATR channel. Because remember, 92% of prices bounce here. So you have a bounce at the negative third ATR channel. You also have I'm also looking for an under 30, over 30. So I do not have Google, but if you do have an under 30, over 30, and a rejection here, I will definitely be buying Google. No double bottoms, no bullish divergences, but I like the rejection of the third ATR channel and that low RSI. There's not a lot of chances and opportunities to grab Google at under 30, over 30. So I am definitely going to be keeping my eye on Google to see maybe Monday or anytime this week if we go under 30 and then close back over. I think that would be a great risk to reward trade for Google. Goldman Sachs, above the value zone, had a 520 crossover that really took off. For me to get interested in Goldman Sachs, I need a return to value, sideways motion, V1, V2. Earnings are coming up, so I'm not going to mark this one. We're not in the value zone. And earnings are coming up, so I don't think I'll have anything on Goldman Sachs. Home Depot, well, you can see the last time we got to the 50 SMA, we really bounced, and boy, did it bounce. But we're back down near the 50 SMA now, or underneath the SMA. We also have the 50 EMA here. Really not my kind of signal, but a close over the 50-day moving average would be a decent risk to reward ratio. If it were me trading this and I took that trade, as long as it stayed above the 50, I would get it. I would keep it. If it closed below the 50, I would not. So not really my kind of trade here. Probably the most likely move on Home Depot for me would be if it rallied into the value zone, came back, gave me a higher low V1, V2. Those are the ones that usually have a stronger leg up. So I don't really see anything on Home Depot. IBB, it's 2908. So it's under 30. It's near the negative third ATR channel. Probably a decent place to be looking at entering along on IBB. But again, I still would need a signal over the 30 RSI. But if it's up on Monday, it would. So I will keep that as potential. INDA, my gosh, this stock or this ETF, I mean, look at the fall this has had. Unreal. And then look at this V formation right back up like it never happened. Too extended for me. What I'd like to see here is a pullback to the 200-day moving average. Give me a good risk to reward ratio. A pullback and rejection of the 200-day moving average would be an option. Pullback at the 250-day would be an option as well. So I'll mark that one as something to look for this coming week. Intel got to the 200-day moving average, rejected it. If it closed back over the 200, some people would take that. I'm not going to take that up here near the second and third ATR channel because I know 92% of prices fail here, 88% of prices fail here. Might continue to go up, you never know. But for me, buying Intel, a return to the value zone in between this green line and that green line would be the best. So I'm not even going to mark that. IWM, which is the Russell 2000 index, is at 4176 RSI. We are below the 200-day moving average. I can just look at this and tell if we come back down and test this low, we will have a beautiful double bottom and a bullish divergence. So ideally, for me, IWM, I'd like to see us come down, test this previous low, have an under 30, over 30 RSI as a trigger. Alternatively, if we close back above the 200-day moving average, that would also be a potential. So I will mark IWM to look for that. Johnson & Johnson, really big, strong bull market here. Not interested here at the second ATR channel. Would need this to pull back to the value zone, sideways motion, V1, V2. Really, what I'd love to buy is right here about 165, because you have the 100, the 200, and the 50 all in a confluence right at a point. This would be an excellent risk to reward ratio, down about 165. So it would have to go down about $9. Don't know if it's going to do that, but I will not mark this one as it is too far away. Coffee, my gosh, all the way down and then huge rally back up here. For me to get interested in coffee, we're well above the 1 ATR channel. Need to have a return to value, sideways motion, V1, V2. So not interested in there. CarMax did have a legitimate signal on Friday, under 30, over 30, under the negative third, over the negative third. I didn't take this, but that is a legitimate signal. Under the negative third, over the negative third, under 30, over 30. If this were to come back down, retest under 30, back over 30, especially being near the negative third ATR channel, I would be interested in. So nothing there yet for me, but I will continue to watch and mark that. Coca-Cola's had a huge move up. Too far extended. Need this to at least come back to the value zone. Couple days sideways motion. Look for a V1, V2. Lockheed Martin, nice close above the 200-day moving average. Does give you a good risk to reward ratio, but it's above the second ATR channel, so I don't buy anything above the second ATR channel. Southwest Airlines, my gosh, look at the V in this thing. All the way down and straight back up, which is good if you're long Southwest. We're up near the third ATR channel, so more than likely 92% of the time this is going to stop going up, possibly go down. I would look at this point, I would have to have it come back down into the value zone, a couple days sideways motion, look for a V1, V2. So nothing there yet. Lyft closed above the value zone. Now it's in the value zone. Lyft, I could look for a couple days of sideways motion, look for a V1, V2. So I will mark that to watch for the upcoming week. Mastercard has just had a huge move up here. Again, look, we got to the third ATR channel and then failed, came back down. If I could get a retest of the 200 with a good risk to reward ratio, I would buy it there. So that will also be something that I'm marking here, and we'll be looking forward to this coming week to see if it can bounce at the 200. McDonald's has had a strong move up here in the value zone. If it can continue to stay in the value zone and then V1, V2 trigger, I would buy it. So I will mark Mastercard. Merck, I already have Merck on the weekly, as you know, with this rejection of the 200. And boy, was that a monster trade. But as far as looking on the daily, I would need this to come back to the 200 again. So nothing there. Microsoft has really, really gotten beaten up on Friday. Let's see what the RSI was. I don't think we went under 30. 33.26. To be able to buy a company like Microsoft with an under 30, over 30 would be a pretty good proposition. I am definitely going to be watching this. It may just bounce from here, who knows, but the legitimate entry would be an under 30, over 30s. And if it has it, I will buy it. So I'll mark that. Netflix, really, 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 really low on Netflix. My goodness, look, we're at 22.69, everybody. So in order for me to get interested in Netflix, I'd have to have an under 30, over 30, or close back over the 250, or close back over the 200. And here's earnings coming up here. So I will mark it. I would buy it before earnings, but I have to stay out of it through earnings. Nike. If we could move down here under 30, over 30, or a test of the 200, that would be a great place to buy on a company like Nike. So that will also go on my list. Pfizer. Nothing really here. 520 cross under. We close under the value zone. If we could come into the value zone, pull back, look for a higher low V1. So that's what I'll look for. PKI. 41.96. it really needs to come into the value zone, look for a higher low V1, V2, V1 or V2, or go lower under 30 over. So I will not mark that. PLTR, double bottom, bullish divergence, under 30, over 30 on Friday. It's still holding the 30 RSI. So if this went under 30, over 30 again with the double bottom bullish divergence, I would be interested. So I'll mark that one. Philip Morris has just been on a tear here, way too extended. For me to get interested in Philip Morris, I need to bounce off the 200-day moving average. So nothing there on Philip Morris to speak of. PayPal, lots of sideways motion here. Whenever you have sideways motion, it leads to trends. Problem is we just don't know which way, either up or down, but eventually will. It's here holding in the value zone. If I could get some more sideways motion on this and then have a V1, V2 trigger, I would be interested in PayPal. So I will hold PayPal. The Qs really, I mean, we went from being above the value zone to under the value zone in one fell swoop. An excellent place to buy the Qs would be an under 30, over 30. So I would be looking for that. Alternatively, a return into the value zone with a pullback and a higher low V1, V2 would also be good. So I will mark the Qs. Rio, boy, I had someone tell me that Rio was going to be good when it was down here, and they were certainly right. So congratulations to Rich for making that call. Would not be interested in buying Rio here. This is just way too extended up near the 6 ATR channel. Shopify's 2766. We have a double bottom. We have a bit of a bullish divergence here. We are at the negative third ATR channel, so I would be looking for a close over the 30 RSI. SIVB above the value zone, rejected the third ATR channel, had a 520 crossover, return to value. Here would be something I would be interested in, but it's not close, so I won't mark it. SLV, which is silver, really not doing anything at the moment. I would need this to come back down, retest this low, under 30, over 30, alternatively having a 520 crossover. So I will keep that on my list. Snap, under 30, over 30 would be a legitimate entry. I will mark that to watch for the upcoming week. Virgin Galactic did have an under 30, over 30, and a V2. This isn't bad, and a double bottom with the bullish divergence here. The entry signal on this was Friday, so I'm not going to even mark that. The S&P, of course, major moving average. Again, we're above the 1 ATR channel. We came into the value zone, so at least it's at value. It didn't hold the 50 SMA, but we are in the value zone. So if I could get some sideways motion here and a V1, V2, that would be of interest to me. Teladoc, under 30, over 30 is what I would need to look for. Double bottom, bullish divergence, so I'll mark that. Teradyne, above the value zone, into the value zone, keeps going down. Need to see this go sideways for a while, so I won't mark that. Bonds, 3364. So an under 30, over 30 would be a potential for bonds. Tesla, we were well above the value zone. Don't want to buy up there. Came back into the value zone, sideways motion. So that would be interesting. We're almost there, folks. Twitter, 2958. Really like this potential trade on a company like Trigger. Double bottom, bullish divergence. If Monday or Tuesday or anytime next week we have a close above the 30 RSI, that would be interesting to me, especially with this double bottom bullish divergence. Qs, excuse me, U, the symbol U, we're at 2906, a close back over the 30 RSI and a close back over the 200-day moving average. When we have a double bottom and a bullish divergence here would be a super confluence of signals. So I'm definitely going to look at Q. United Airlines, too far extended, not interested there. UNG, not interested there. United Health Group, if we could get a pullback to the 100-day moving average at the same time we have a confluence of an under 30, over 30, that's a great confluence. Don't know if it will get there, but I will mark it. Oil has been on a tear. Nothing really here on oil. I would need this to return to value, sideways motion, and or a rejection of the 200-day moving average like here. And you can see that rejection of the 200 would have paid off handsomely. UUP, which is the dollar, you can see the dollar's going down, which that actually is good for equities. The higher dollar is usually bad for equities. I don't really see anything here. VIX has been a wild one. Under 30, over 30, that would have worked out so far, but nothing on VIX. Verizon, up nice, but up at the third ATR channel, no interest there. Walgreens would need a return to the 200-day moving average, so no interest there. Walmart has worked so far off the 200-day moving average. I would need a retest of the 200, so no interest there right now. XLE, energy, of course, has been moving way up. There's no way I would buy it here. Need to wait for return to value. XLF, too far extended. Financials have been doing well. Looking for a return to value, but not close, so I won't mark it. Real estate has had a big pullback here. Is holding the 50-week moving average. It could hold this 50, I don't know. We did close below the -1 ATR channel, so I need a return to value this way, pullback, higher low V1, so I won't mark that. XLU, return to value and a V1, and a false breakout to the downside. This is decent. That actually would have been a legitimate trade, but I'm not going to chase it here. XLV, healthcare. You know, an under 30, over 30 rejection of the -3rd ATR channel would be a great place to look at that, or at the 200-day moving average, so I will mark that. Exxon, I already have this trade, thankfully, on the monthly, not interested on the daily. And Zoom, I actually have Zoom with the double bottom bullish divergence and the under 30, over 30, and I'm still in that trade. So let's real quick review the ones that I flagged. Ooh, there's a bunch of them. And a lot of these are going to be the same, but again, these are the potential ones that I'm looking to trade this particular coming week. Adobe, an under 30, over 30, under the -3rd, over the -3rd. That would be the signal. That one's very close. Amazon, an under 30, over 30. It's not that close, but if I can grab Amazon with an under 30, over 30, that would definitely be of interest to me. Alternatively, close back over the 250 or the 200. ARC has a double bottom bullish divergence, just looking for an under 30, over 30 as my trigger. BITO, which is a Bitcoin proxy ETF, close over the 30 RSI, close over the -3rd ATR channel would be legitimate. DocuSign, close over the 30 RSI would be a legitimate signal. Etsy, another under 30, over 30, and rejection of the 3rd ATR channel would be legitimate, especially in context of the double bottom bullish divergence. Facebook, rejection of the 250 below or a close back over the 200 above would be interesting. Fiverr, we have a double bottom bullish divergence, and under 30, over 30 would be interesting. Gold, close back over the 200 or a 520 crossover would be a legitimate signal. GNRC, close back over the 30 with the double bottom bullish divergence would be interesting to me. Google is one I really like. If we could go under 30, over 30, rejection of the -3rd ATR channel. IBB, close back over the 30 RSI and a close back over the -3rd ATR channel. India, I would need a pullback. The INDA would need a pullback to the 200. Russell, under 30, over 30 would be my favorite place to buy this, especially with this double bottom and bullish divergence if it gets there. Alternatively, a close over. CarMax already had the under 30, over 30, so if it came back under 30 and back over 30, that would be interesting. Lyft, needs some sideways motion, V1, V2. Mastercard retest the 200 would be interesting. So this gives a lot of potentials to look for next week. So I hope this helps. McDonald's into the value zone, sideways motion, V1, V2 would be interesting. Really like Microsoft here. If we could go under 30, over 30, that would be, I think, a great place to buy a great company like Microsoft. Netflix, back over the 250, back over the 200, or back over the 30, being that we have a double bottom bullish divergence. Nike, tested the 200 would be my ideal place to buy it. Pfizer, looking for 520 crossover or a higher low V1, V2. PLTR, retested the 30 would be a good place. PayPal, need a 520 crossover or a V1, V2. The Qs, would love to pick up the Qs down here at the 200-day moving average or an under 30, over 30. Shopify, close back over 30. Silver, if we could retest this bottom here, double bottom bullish divergence, maybe an under 30, over 30, or maybe a V1 or a V2 trigger to get us in if we tested the bottom. Snapchat, under 30, over 30. SPY, would like to see the SPY go sideways here, look for a V1 or a V2, or potentially if it comes back down further, maybe buying it near the negative third ATR channel like a 30 RSI. Teladoc, under 30, over 30 with this beautiful double bottom bullish divergence. TLT, under 30, over 30. Tesla, retested this 100-day moving average or sideways motion in the value zone with the V1, V2, or if we got down to the 200-day moving average, we don't know what's going to happen. Twitter, really like Twitter if we could get back over the 30 RSI, especially with this double bottom bullish divergence. Unity Software, I really love if we could get a close over the 30 and a 200. That would be a confluence of signals. UNH, if we could get to the 100-day moving average and an under 30, over 30 RSI, or a rejection of this 200 or 250 would be good. And then XLV here, if we could go under 30, over 30, or a retest of this 200-day moving average. So that hopefully gives you some things to look at. Now, there's a lot of potentials that I've just gone over. I only take one trade per day. So if we have a big up day on Monday, a lot of these are going to trigger. That doesn't mean I'm going to buy every single one of them, right? I mean, I have a rule where I only buy one setup per day. If they're correlated, I may buy, a tech stock, and I may buy gold because they're uncorrelated, but I would only buy half of each one. But in a nutshell, I only basically buy one per day. So here we have this whole list. If they all triggered, would I buy them all? Absolutely not. Absolutely not. I'm just trying to put in this video some potentials for me to look at for this coming week. And I'll just have to take it on a trade by trade basis. But anyway, hopefully this helps you to look at some things for next week. So much different doing this format than live. I'm used to speaking with people and saying, hey, how's it going? I really miss that. But anyway, I hope at least this will somehow be helpful for you. Before I let you go, I just want to mention a couple things. I do teach private one-on-one lessons in the evening time via Skype. This new trading position I have does not preclude me from teaching because I teach at nighttime, via Skype one-on-one course. It's a great course. It's 15 hours total. I teach 5 sessions. Each session is 3 hours. That's where you get the 15 hours. And I've been teaching for the last 3 years. I've taught people all over the world. I love to teach. I'm a good teacher. I teach a really great course where I teach you step by step all 5 of the different trading approaches that I use. We do a lot of simulation trades. I ask a lot of questions. I throw a lot of curveballs, but when you're done with this course, I know you're going to be a better trader. It does cost $1,750. I know it's a lot of money, but I promise you it is worth every single penny. I've turned out so many good traders. And like I said, I teach you step by step exactly how to trade like I do. Good risk to reward ratios, profit targets, all sorts of stuff. And it's an intense course, but if you're interested in doing this course with me, I know you're going to be a better trader. And my email is in the link of this YouTube video. All you have to do is send me an email and say, Greg, I'm potentially interested in taking your one-on-one course. I will write you back and say, thank you for saying hello. I appreciate it. Let's do a Skype call. The Skype call is free. It's not a sales call. I can promise you that. It's just that when I work with students, I want to make sure we're a good fit. And so over the Skype call, I just want to find out about you, your trading challenges, your goals, what you're trying to get out of the course. And it's a good time for you to ask me specific questions about the course. And when we're done, think about it as long as you want. I will not call you back or email you back. That's up to you. But think about it as long as you want. And then one day if you decide, I really do want to learn this with Greg, and I know I'm going to be a better trader if I do, just email me. We'll get it scheduled and away we will go. And then lastly, if you like online video courses, I have a great online video course at udemy.com. The link is in the description of this YouTube video. I teach you step-by-step how to trade the deep dip buy stock trading strategy. A lot of what we went through here today for potential upcoming trades is based upon the deep dip buy strategy. It's a great course, has a ton of content, 9.5 hours of video, 15 study guides, 26 videos total. And the best part, it only costs like $12 or $15 on Udemy. I've had so many good reviews and feedback on this course from all over the world. If you're just starting to trade, do yourself a favor, click on that link, watch the course. I teach you step by step. It's just a great course, and I know it's going to make you a better trader. So check that link, that udemy.com link. It's only $12-15, and especially if you're a beginner, boy, is it really helpful. So during my podcast, my regular live podcast, oops, sorry, there we go. I always end it off with this saying, and I want to continue to do that with this new weekly edition format, but this is from Martin Kornfeld. If we all do one random act of kindness daily, we just might set the world in the right direction. And this is something that I've tried to incorporate into my life, just doing one nice thing for another human being every day. It doesn't have to cost any money. I think it's a great thing to do. If you could also do something nice for an animal, that would also be helpful to the world, and it would make the world a better place. So I try to do one nice thing for an animal. I try to do one nice thing for a human every day. I believe it's been a blessing in my life and a positive and just something to consider. But if we all really were nicer to each other and did some nice things for each other, I know the world would be a better place for sure. So anyway, I hope that this new format is going to help. Again, I'm just going to on the weekends, I'm going to post a recorded video, not the live video, but I'll discuss how my trades went, the daily trades, the weekly trades, the monthly trades. We'll check all those every weekend. And then like we did today, I'll go through my watch list and identify some potentials for moving forward. So anyway, if you like this video, I would appreciate if you could hit the thumbs up button. It always helps build the channel and keeps the channel around. And anyway, for those of you my regulars in the live stream, miss you guys. I really, really do. And it's just one of those things that I took this new position. And the new position is working out well, by the way. So anyway, at least I'll try to do this recording for you each week. So if you have any questions, you can email me. And I hope you have a good upcoming week. Be careful, be safe with your trading, position size correctly, look for those confluence of indicators, get out quickly when you're wrong, have the courage to hold when you're right. And if this doesn't make sense to you, like I said, I offer lessons. I teach you all of this, the one-on-one lessons. So just email me or take the online video course as well. And I go over all of that as well. So on the way out here, I have to run the U.S. legal disclaimer. But yeah, hope you have a good upcoming week. Be good, be safe, be kind to each other, drive safe. And I will have another weekend video next week, God willing. So take care, everyone. And on the way out here, I have to run the U.S. legal disclaimer. Thanks a lot. Have a good weekend, and an upcoming week. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.